Hi everyone. In this video, I want to discuss with you regarding depreciation. What is depreciation? How many methods are there in calculating depreciation? What are the formulas related to those methods? And I want to discuss with you solutions for few problems under depreciation. First, let us discuss what is depreciation. Depreciation means decrease in the value or capacity of the asset. If any asset capacity or value decreases, that is known as depreciation. Why asset capacity will come down? Because if we use the asset in the business, definitely the capacity of the asset will come down because we are using that asset in the business. If we use any asset, obviously the capacity of the asset will come down. Take the example of bike. If we purchase one new bike, it gives more mileage. For example, if we pour 1 liter of petrol, it gives, for example, 60 kilometers mileage. So you use it for 1 year. After 1 year, it won't give 60 kilometers mileage. It gives less mileage, around 58 kilometers, if we pour 1 liter of petrol. Why it is so? Because we used it for first 1 year. So bike capacity came down because we used it for 1 year. That is why it is unable to give 60 kilometers mileage as it has given in the first year, because the capacity of the asset came down. So how much capacity came down? That is known as depreciation. So decrease in the value or capacity of the asset is called depreciation. Depreciation is loss for the business. That is why depreciation is shown every year in the profit and loss account on the debit side, because it is loss. And in the balance sheet, this depreciation will be deducted from the relevant asset under assets. And here depreciation is actually a loss, as well as it will be shown as a deduction item in the balance sheet from the asset when actually depreciation is calculated. Every year at the end of the year, depreciation is calculated only once, only for the used period. During 1 year period, if machine or any asset is used for 1 year, 1 year depreciation is provided in the business at the end of the year. So how they calculate the depreciation? How many methods are there to calculate the depreciation? Let us discuss that now. Actually, there are so many methods in calculation of depreciation, but most popular methods are only two. They are, first one is fixed installment method, second one is diminishing balance method. Let us discuss what are those methods and what are the formulas of those methods. First one is fixed installment method. This fixed installment method, also known as original cost method, equal installment method, straight line method. And here depreciation, if the business follows this fixed installment method, depreciation is same if machine is used for 1 year. It is fixed, it is same. So that is why we call it as fixed installment method. Suppose in the first year depreciation is 5,000 rupees. In the second year also it will be 5,000. In the third year also it will be 5,000. So same depreciation is provided every year. And what are the formulas under this method? Two formulas are there under fixed installment method to calculate depreciation. First one is depreciation is equal to asset value minus scrap value divided by life of the asset. So second formula is depreciation is equal to asset value into rate by 100. So let us go to first formula. Asset value means what? Asset value means actually we should add 4 items to get the asset value. Purchasing price of the asset, transport charges, installation charges, and erection or repair charges. If we add all these 4, then we call it as asset value. And what is scrap value? Scrap value means residual value. So here a definition is there for scrap value. Every asset is having fixed life period. It may be around 10 years, 15 years, 20 years, like that. Suppose for example, one asset life period is 10 years. Business can use that asset for 10 years perfectly. And if it is using for 10 years period, they won't get any loss by using that machine. But after completion of that life period, if they continue using that machine or that asset, then there won't be any benefit out of that usage. So expenses will be more, but benefit will be less from that asset. That is why they want to sell it. They want to sell it after expiry of the life period. So who will purchase that asset after expiring of that life period? Nobody is ready to bear the loss, no? So they have to sell it to scrap. The value whatever businessman gets by selling that asset for scrap after the completion of the life period is known as scrap value. They get very less value. So that is known as scrap value. Scrap value is also called residual value. Other name for scrap value is residual value. And what is life of the asset? Just now I explained. Life of the asset means it may be around 10 years, 15 years. So the period for which actually the machine or asset works perfectly and businessman can get profits by using that. So it works effectively till that period, till the completion of that period. So that is known as life period of the asset. This is the first formula under fixed installment method. Let us go to second formula. Second formula is depreciation is equal to asset value into rate by 100. Again asset value means same. What I explained in the previous formula. We should add 4 items to get the asset value. And into rate. Rate means percentage. It may be 5, 10, 15. So it depends upon the business. If they want to provide 10% depreciation, we can take in the place of rate 10 divided by 100. This is the second formula. Students may get doubt if in any problem fixed installment method is given. So which formula to be taken to calculate the depreciation? You have to check the question. If rate is given in the question, percentage is given in the question for depreciation, then you should take second formula. Depreciation is equal to asset value into rate by 100. If rate is not given in the question and information is suitable to take the first formula, then you should take the first formula only. If rate is given in the question, take the second formula. If rate is not given, take first formula. That's it. Okay, hope this is clear to everyone. And let us discuss what is asset value clearly. Just now I explained. Again, let us discuss that. Asset value means we should add 4 items, I said. What are those 4 items? Purchasing price, transport charges, installation charges, erection charges. I'll give you one example why we should add all this. Suppose one business actually set up in one place. For example, that may be Delhi. So they set up one business in Delhi and they purchased a machine from Bangalore. So from Bangalore to Delhi, they have to transport the machine from Bangalore to Delhi. And for purchasing that machine, they incurred, for example, 20,000 rupees. I have taken a least amount here. So take 20,000. That is purchasing price. And from Bangalore to Delhi, transport charges are 2,000 rupees, for example. And they brought it to Delhi. Okay, fine. and they have to install that machine in the business. So expert has to come and he has to install it. So installation charges will be there. So I have taken here for example 1000 rupees. And if any erections are nothing but repairs. So if any erection charges are there, and I have taken here 1000 rupees. All this should be added to get the asset value. So total 24,000 is asset value here. So before starting production on the machine, whatever expenses we incur, those all are known as asset value. Those all should be added to the purchasing price. Then only we get asset value. And students may get a doubt. Suppose in the problem, they did not give all 4, only 2 are given. You add 2 and don't add remaining to whatever is not given. So then you will get the asset value. If only purchasing price is given, take purchasing price, don't take all remaining 3. But if they have given in the question, you should take all the 4 and you should add, then only you will get the correct asset value. If only one item is given, for example purchasing price, take that only as asset value. If 2 are given, for example purchasing price, transport charges, you add those 2 and you will get correct asset value. If 3 are given, you add 3. If all 4 are given, you add all 4 to get the asset value. Hope this is clear to everyone. Let us go to next discussion. I told you that there are 2 methods to calculate the depreciation. First method is fixed installment method, we discussed just now, and second one is diminishing balance method. We can calculate depreciation under these 2 methods because these are 2 popular methods. And you may get a doubt, what is the difference between in these 2 methods? First method is fixed installment method, and there I explained that depreciation is same for all the years under fixed installment method. For example, in the first year depreciation is 5,000, second year also depreciation is 5,000, third year also 5,000. So under fixed installment method, it is remaining same for all the years, but it is not like that in the diminishing balance method. First year it may be some amount around 5,000, second year it won't be 5,000, that may be around 5,000. So third year it may be 4,000, next year it may be 3,000. So here depreciation comes down, depreciation decreases, and there is a fluctuation in depreciation changes, and in the reducing manner. Depreciation always is not same under diminishing balance method, it changes, and that change also is in declining manner, in the reducing manner, it gets reduced. Okay, so that is the main difference in between fixed installment method and diminishing balance method. And here under diminishing balance method we have only one formula, that is depreciation is equal to asset value into rate by 100. Asset value means same that whatever I have explained just now, that is asset value. Rate means percentage and divided by 100. Divided by 100, this is formula of depreciation under diminishing balance method. And this diminishing balance method is also known as decreasing value method, reducing balance method, written down value method. These are the other names for diminishing balance method. Hope this is clear for everyone. If any doubts you get, you can mention in the comment section, and I'll explain few problems after this discussion. You can concentrate on that, and if you have any doubts in the problems to clarify that, you can mention in the comment section so that I will explain again. So I'll clarify your doubts. If you like the video, if you understand this class, like the video, share the video and subscribe the video. Let us discuss problems on depreciation. So here I have given one question and we are going to solve it now. So let me read the question first. Srinivas bought a machine for rupees 18,000 on 1st October 2015 and paid rupees 2000 for its installation. Depreciation is charged at 10%. So here if you observe, Srinivas is a businessman. He bought one machine for rupees 18,000. So purchasing price is 18,000 and date of purchasing is 1st October 2015. And he is paying 2000 rupees for its installation. So whenever any installation charges, transport charges, repair charges, if we have anything like that, then we have to add that to purchasing price. Then only we will get asset value. So 18,000 plus 2,000, 20,000 is a asset value now. Next, depreciation is charged at 10%. So rate of depreciation is 10%. Here rate is how much? 10%. And under which method they are calculating depreciation? Under original cost method. So here they are calculating that on original cost method. So original cost method is nothing but straight line method. Original cost method means straight line method. So rate of depreciation is 10%. And here every year accounts are closed at the end of the financial year. So financial year means always always it starts from 1st April and ends on 31st March. So here the machine is purchased in the year 2015. So we take from the year 2015 onwards. 1st April 2015 is a starting date and it is ending on 31st March 2016. So this is the opening date, this is a closing date. So it consists of 12 months period. We call it as financial year. If any year starts from 1st April and ends on 31st March, in between these two 12 months will be there. But 1st April 2015 to 31st March 2016. Okay, that is one financial year here. And we have to take from 2015 onwards because machine is purchased in the year 2015. So this is the first year actually in this problem. And next, prepare machine account for first 3 years. We have to prepare account for how many years? 3 years. Okay, let us start preparing account, machine account. So here we have to draw columns like this. Date, particulars, LF. LF means ledger folio, amount. From year to year this is called debit side. Next again same columns are going to repeat it. Date, particulars, LF, amount. But this is credit side. From year to year it is called credit side. So CR here. And debit side whatever items we record we have to start with the word to. Credit side whatever items we record we have to start with the word by. And let us start preparing the account. We have to prepare the account for 3 years. Let us start preparing now. So before preparing the account you have to remember some points. Whenever any asset is purchased we should write here on the debit side. We have to mention to bank account always. And after purchases, in any year if we sell the asset, we have to write on the credit side. In any year if we sell the asset, we have to write on the credit side by bank account. Next, every year at the end of the year, means on the closing day. On the closing day, business calculates depreciation and records in this account. That depreciation will be shown on the credit side every year. When every year only once they calculate depreciation on the closing date. So always in every year we have to write depreciation. Okay, this is second year. Again we wrote depreciation here. This is third year. We wrote depreciation here. So like this we should write depreciation for all the years at the end of the year. Here they asked us to prepare account for 3 years. So we have to prepare the account for 3 years. This is first year and this is second year. This is third year. So let us see how to prepare the account now. Here, first asset is purchased. First, machine is purchased. On which date the machine is purchased? On 1st October 2015. So, just now I told that if a machine is purchased, if any asset is purchased, we have to write on the debit side to bank account, and date of purchase should be recorded here. We purchased on 1st October 2015. Here we should write 1-10-2015. Since we are purchasing, we should write to bank account. And what is asset value? Purchasing price is 18,000 and installation charges are 2,000. So total 20,000. 20,000 we should write here. And after purchasing on this date, businessman starts using this asset in the business. October finished, November, December, January, February, March, April, May. But here we should not continue because October, November, December, January 1st and February, March. March is a closing date. March is a closing date here. So we should stop here itself. From actually year starts from April, but we did not purchase the asset on 1st April. We purchased it on 1st October. From 1st October onwards till the closing date, till 31st March of 2016, how many months we actually used that machine? That should be considered. So see, October, November, December, January, February, March. So we used only 6 months. Okay. So whenever we use the asset for any months, we should provide depreciation for that many months. Here we are using asset during this year from this date to closing date only for 6 months. So we should provide depreciation only for 6 months. Okay. So first of all, let us write. Always depreciation we should record on the credit side at the end of the year. So ending date 31-3-2016. This is the ending date for this financial year. Actually, year starts from 1st April to 31st March of 2016. But we did not purchase the machine on 1st April. We purchased on this date. So we are going to start the machine account from this date only. So purchase we recorded here. And after that, on the closing day, we should write depreciation. That is we recorded here by depreciation account. Okay. And we should calculate depreciation here. How we should calculate? This is what method? Original cost method. So on original cost method, how to calculate the depreciation? I already told in the beginning that under original cost method, there are two formulas to calculate the depreciation. If rate is given, we should take which formula? This formula. See here. Depreciation is equal to asset value into rate by 100. Suppose if that rate is not given, we have to take other formula which I explained in the beginning. But here in this problem rate percentage is given. So we are going to take this formula. Original cost method. Depreciation formula is asset value into rate by 100. In this question asset value is 20,000. 18,000 is purchasing price. 2,000 is installation charges. Total 20,000 into 10 by 100. So if we do this calculation, 0, 0 cancel, 0, 0 cancel, 2,000 remains. Okay, 2,000 is depreciation. But whatever depreciation we get here, that is known as annual depreciation, means 1 year depreciation. This 2,000 is depreciation for 1 year if the machine is used for 1 year. But here in this year, during this year, machine is purchased on 1st October and closing date is 31st March. Only 6 months machine is used. So we can't take depreciation of 2,000 because 2,000 is annual depreciation. So how much we can take? We can take only for 6 months because depreciation should be calculated only for used months. So let us calculate depreciation for 6 months now. Annual means 12 months depreciation. Depreciation for 6 months. How to calculate? Take annual depreciation into, for how many months we require? 6 months. 6 divided by 12 because 12 months in the year. If we need depreciation for 9 months, you can take 9 by 12. Here you can take 9 divided by 12. If you want to calculate depreciation for 3 months, here you can take in the place of numerator 3 divided by 12. But here we need only for 6 months, 6 by 12. If you do this calculation, 6 ones are, 6 twos are, 2 ones are, 2 ones are, so you will get 1000. So 1000 is depreciation for 6 months. Okay, if we want depreciation for 12 months, we can take 2000. But here we take only 1000. Hope this is clear for everyone. So, by depreciation account 1000 we took, because 20,000 is asset value into 10 by 100, we get 2000 annual depreciation, but we should not take 2000 here because machine is used only 6 months. So 2000 into 6 by 12, we get 1000. We recorded here 1000 depreciation for 6 months. Okay, from year to year 6 months are there. From 1st October to 31st March 2016, 6 months are there, we provided 1000. Now we should total, we have to balance the account. How to balance? First, leave some gap. Now we did not write this. Okay, so you assume that we did not write this. Do totals. If it is not here, then what are the totals? 20,000, 1000. Okay, and 20,000 is more than 1000. Both the sides you should write only more amount. 20,000, 20,000 in totals. From 20,000 you deduct 1000, you will get 19,000 you record here. And name it as by balance carried down. Okay, so this is known as balancing the account. So we balanced here and we are getting 19,000. Okay, from 20,000 we deducted 1000, we are getting 19,000. Name it as by balance carried down, and date will be always last date in the month. What is the last date? 31st March 2016. Now 1 year account is finished. This is 1 year account. But they asked us to prepare account for 3 years. Let us do for remaining 2 years. So here we are going to start second year. This is second year. Bring down this 19,000 on the debit side of this account. Here we have balance carried down 19,000. You bring here and record here to balance brought down 19,000, and date will be next day of this 31st March. After this we will get 1st April. 1st April 2016 to balance brought down 19,000. And this is the starting date here, and closing date is obviously 31st March 2017. Here it is 1st April 2016. Closing day will be 31st March 2017. Because always in every year 12 months should be there. If year is starting on 1st April, if we calculate 12 months period, we are going to close the accounts on this day, 31st March. On 31st March again we should write depreciation on the credit side, because machine is used from 1st April to 31st March of 2017. Completely for 1 year we should write depreciation on the credit side in this account by depreciation account. So how we are going to write depreciation? Whenever we write depreciation here, we should see which method we are following. We are following original cost method, means straight line method, means fixed installment method. Okay, in this case we should take same depreciation whatever we calculated in the first year by using the formula. Okay, we came to know that in this year we used machine for 1 year. We used a machine for 1 year, 12 months period. So 12 months depreciation should be taken. Depreciation we calculated. What is annual depreciation? 2000. 1 year depreciation. That only should be taken because it is original cost method. Whatever we calculate by using formula and whatever we get annual depreciation, that should be taken always if we use in that year for 12 months. Okay, so here we use 12 months period, again 2000 depreciation. Balance it again. Okay, this is not there, and balance this 19,000, 2,000. So both the sides totals 19,000, 19,000 you write, because always more amount should be recorded. Here it is less 2,000, here it is more. 19,000, 19,000 you record in totals both the sides. From 19,000 you deduct 2,000, you get 17,000. 17,000 is a balance carried down. Date will be last date of this year. Last date is this only. Second year account also finished. Now let us go to third year because they asked us to prepare account for 3 years. Okay. And in the third year also, balance carried on will be taken on the debit side as balance brought down. To balance brought down. Date will be next day of this 1-4-2017. To balance brought down, same amount we should write 17,000. And here again in this year the mission is used from 1st April to 31st March. Full 1 year. If you calculate full 1 year, mission is used 12 months. So you write by depreciation account on the closing day. And since this is original cost method, we should take same depreciation what we calculated in the formula. If we use for 12 months, we should take 2000 only. Okay. So let us take 2000 only. Here I have shown already 2000. Okay. And again suppose you assume that it is not here and 17,000, 2000 is there. Balance the account. More amount should be recorded both the sides in totals. 17,000 is more. So we recorded both the sides 17,000. From 17,000 you deduct 2,000 because it is less on this side, on credit side. We get 15,000. Record 15,000 here. Name it as by balance carried on. Date will be last date in the month. So 3 years account is finished. 1, 2, 3. But we should write balance brought down on the debit side and we should leave the account. Balance carried on 15,000 you write on the opposite side. Debit side to balance brought down 15,000. Date will be next day of this. 31st March, next day is 1st April 2018. Okay. This is how we prepare the machine account, asset account. Hope this is clear. If any doubts are there, you can mention in the comment section and I will explain again, and you can, if any doubts are there, I will clear if you mention in the comment section. So let me show these months. This is question and this is solution. Full solution, machine account along with question. And here we have formula and calculation part. Let us discuss second question now. So here Ram and company purchased a machine. So one company, Ram and company, they are purchasing one machinery for rupees 60,000. 60,000 is a purchasing price. On 1st April 2017, they are purchasing on 1st April 2017. Purchasing price is 60,000 and purchasing date is given. And spent rupees 5,000 for its erection. So erection means repair charges. Okay, so this 5,000 we should add to 60,000, then only we will get correct asset value. So 65,000 is a asset value. Depreciation is charged at the rate of 10%. So depreciation rate is 10% under straight line method. So they are using straight line method, means fixed installment method. We can also call it as original cost method. So they are using straight line method. Additional machinery was purchased on 1st October 2018. So in 2018 year, on 1st October, they are purchasing one more machine, additional machinery on this date for rupees 20,000. So 20,000 is the asset value for the second machine. This is asset value because they did not incur any other expenses for purchasing, only 20,000 purchasing price. So this is asset value here. Prepare machine account. So we have to prepare machine account for first 3 years. We have to prepare account for 3 years. assuming that accounts are closed at the end of March 31st every year. So when actually they are closing books? March 31st. Means they are following financial year. Financial year always starts from 1st April and ends on 31st March. Okay, so they are closing books on 31st March means they are following financial year. So let us do problem. I already told you all how to prepare asset account in the previous class. So here columns are ready. Date, particulars, LF, amount. This is debit side till here. And again credit side starts with same columns. Date, particulars, LF, amount. Credit. Here debit. Account name is machine account. So if machine is purchased, we should write on the debit side. If it is sold, we will write on credit side. At the end of year, every year, businessman calculates depreciation that will be recorded on the credit side every year at the end of the year for used period. If they use machine for 1 year depreciation. If they use machine for 6 months, 6 months depreciation. If they use machine for 3 months, 3 months depreciation. So we should see how many months are whether 1 year they used completely. So we should calculate depreciation and we should record on the credit side. So on here, when actually they purchased machine on 1st April 2017 for 65,000 rupees. Asset value is 65,000. Let us write on the debit side to bank account. Since we have two machines, we should mention first machine here. Okay. So date of purchasing is 1-4-2017. Same date. And purchasing total asset value. We should not write only purchasing price. We should write both. 65,000. Okay. And next, after April, May, June, July, August, September, October, November, December, January, February, March 31st, 2018. That is a closing day. On the closing day, businessman provides depreciation. So buy depreciation account. Okay. And how to calculate depreciation? Asset value. We have formula. You can see here. Depreciation formula is asset value into rate by 100. Okay. So first machine depreciation. Depreciation is equal to asset value for first machine is 65,000 into rate is 10% divided by 100. If you do this calculation, 0, 0 cancel, 0, 0 cancel. 6,500 is remaining. And whatever we get here, that is known as annual depreciation. 1 year depreciation, 6,500. 1 year means 12 months. For 12 months, 6,500. If they use for 6 months, we have to calculate again depreciation for 6 months or 3 months like that. But if the businessman is using machine for full 1 year, we have to write 6,500 as depreciation for first machine. So here you see. By depreciation account, same thing I have written here. 6,500 because they used full 1 year from year to year this date. From this date to this date, 1 year is the 12 months. So 6,500 we have recorded. And suppose if this is not there, okay, then 65,000 on the debit side, 6,500 on the credit side. Both the sides in totals we should write more amount, 65,000. From 65,000 you deduct 6,500, we get 58,500. This is known as balancing the account. We balanced it and name it as by balance carried on. And date is last date in the year. Last date is 31st March 2018. Okay, because they are following financial year, no? It starts from 1st April and they purchased machine also on 1st April. Here we record only purchasing date. Okay, so here purchasing date as well as starting date is same. And ending date is 31st March 2018. 1 year account is finished. Let us go to second year. Same thing you take here on the debit side. To balance brought down 58,500. Immediately next day of this should be taken here. 1st April 2018. If you observe the question, in 2018 something happened. What happened? Let us see. Actually, this year is from 1st April 2018 to 31st March 2019, 12 months period. So during this period, if anything happens, we should record here only. So here on 1st October 2018, they purchased another machinery. 1st October 2018 falls during this period only. So we should record that second machine purchase also here only. If machine is purchased on any date, we should record on the debit side. That is why to bank account, second machine, date is recorded, date of purchase, asset value is 20,000. So 20,000 is recorded. Okay. And next, after October, November, December, January, February, March 31st, 2019. So till that period nothing happened. Only one machine purchased we recorded here. On the closing day we should write depreciation. So here by depreciation account. But we have two machines. First machine, second machine. And first machine we used from April 1st, full 1 year. Okay. First machine depreciation. Actually we have to calculate whatever depreciation we have for full 1 year, that only will be taken, because we have to follow straight line method. In straight line method, whatever depreciation we calculated in the formula, that will be taken every year if they use it for 1 year. If they use it for months, we have to take 6,500 and we should calculate for months. If 3 months the machine is used in any year, 6,500 into 3 by 12. Okay, so this is a base, this is a depreciation that we have to follow every year for first machine if they use for 12 months. Because this is which method? Straight line method. Same depreciation we take if the machine is used 1 year. And here that is why we have taken for first machine 6,500. Okay, whatever values we used in the formula, same. Second machine depreciation. We have to calculate. See here. Second machine depreciation is asset value into rate by 100. Asset value is 20,000 into 10 by 100. 2,000 we get. So annual depreciation is 2,000. Okay, whatever we get here, that is known as annual depreciation. So annual depreciation is 2,000. But the machine is not used for 12 months here. When they are purchasing on 1st October 2018, October to 31st March, October, November, December, January, February, March. So only 6 months are there. So we should provide depreciation for only 6 months. Okay. Let us see. 1 year depreciation is 2,000. Depreciation for 6 months is equal to 2,000 into, we need for 6 months, 6 by total months are 12 in 1 year. If we do this calculation, we get 1,000. Okay. So how to do this calculation? 6 ones are, 6 twos are, 2 ones are, 2 ones are, 0, 0, 0. So 1,000 into 1, 1,000. Okay. This is how we get 1,000 depreciation for 6 months. So here I have taken for second machine, same calculation I did here. You can see that clearly. So 1,000 I am getting. First machine depreciation is 6,500. Second machine depreciation is for 1 year 2,000, but we used it for only 6 months. So 6 months depreciation 1,000. You add these two, you will get 7,500. We recorded 7,500 here. This is a depreciation of 2 machines. Okay. And now let us do balancing. Whenever we do balance, I already said that amount, first of all, it will not be there. And let us do totals now. 58,500, 20,000. It will be 78,500 and here 7,500. Which is more? This only is more. Debit side value. So both the sides you record 78,500 and from this you deduct this 7,500. You will get one value, that is 71,000. By balance carried down 71,000. Date is last date in the year. Same date. Okay. And let us find out what is the value of first machine as well as second machine. How to find out? Just from the opening value you deduct its depreciation, we will get the value. First machine opening value is 58,500. From that you deduct depreciation of first machine. You will get 52,000. And second machine opening value is 20,000. You deduct its depreciation. This is second machine depreciation. You will get 19,000. 20,000 minus 1,000, 19,000. You add this, you should get 71,000. If you don't get 71,000, your calculation is wrong here. Okay? Understood, I think. And let us go to next year. So take this 71,000 on the debit side, because they asked us to prepare account for 3 years. First year finished, second year, now third year. Okay, and these values we have to take on the debit side by writing to balance brought down. Date will be next day of this, 31st March, 1st April. Okay, and same thing I copied from here. Next, in this year, 1st April 2019 is the opening date, and nothing happened. They did not purchase anything, they did not sell anything. And on the closing day, we have to provide depreciation because they use these 2 machines. So, credit side, closing day, 31-3-2020. This is opening day, this is closing day. Okay, by depreciation account. Since this is straight line method, for first machine, 1 year depreciation is 6,500 annual depreciation. Second machine 1 year depreciation is 2,000. We should take these two only because 2 machines are there in the business from the opening day, from 1st April. So 2 machines are used from 1st April in the business. So both are used for 12 months. So we should calculate depreciation for 1 year. And that is why we have taken 6,500 for first machine, 2,000 for second machine. If we add these two, we will get 8,500. And it is not there. Okay, let us balance it. 71,000, this side 8,500, which is more. 71,000 is more. In totals we should record both the sides 71,000, means more amount. I recorded here both the sides 71,000 only. From 71,000 you deduct 8,500, you will get 62,500. This is known as balancing the account. And we should write here by balance carry down. Date is last date. Always for balance carry down, last date in the year, 31st March 2020. For depreciation also last date. Okay, last date in the year. They are following financial year, no? That is the 31st March. Okay, and here we should write the, in this 62,500 we have 2 machines value. How to get that? Just this is just see here, this is a value of 52,000 is a value of first machine on the opening day. From this you deduct depreciation of first machine. 6,500 you deduct from 52,000, you will get 45,500. It's very simple. From 19,000, this is a second machine value at the opening date. From 19,000 you deduct its depreciation. Second machine depreciation is 2,000. You will get 17,000. Okay. These are opening values of the machine. These are closing values. How we are getting closing values? If we deduct depreciations of both the machines from its respective values, we will get the closing values. Both, if we add, we should get 62,500. 3 years account is finished. This is third year, second year, first year. Okay, 1 first year, second year, third year. So 3 years account finished. Record this balance carried on the debit side as it is. Okay, and we can leave the problem because 3 years finished. Date will be next day of this. 31st March, next day is 1st April. We can close the account. I'll show the solution once clearly, you just observe it. Machine account, first year. Next, second year. Next, third year. Okay. Hope this is clear for everyone. And I'll show the previous one also. Question. This is question. And this is calculation. Okay. Hope this is clear. If any doubts are there, you can mention in the comment section so that I'll clarify your doubts. If you want me to make any videos on any problems, you can mention in the comment section also. I'll make videos for those problems. Let us discuss next question. This is third one. Let us read question first. Raghu and company purchased furniture. So Raghu and company is one company. They are purchasing furniture on 1st April 2016. This is a purchasing date. And what is the purchasing price? 40,000. Depreciation is provided at the rate of 10%. This is rate of depreciation. So only purchasing price is given. Asset value is 40,000. And here no installation, no repairs, no transport charges. We need not to add. Only 40,000 is the asset value. If those are given in the question, we should add to purchasing price. Then we will get the asset value. But here no other information. Only 40,000 is given. So asset value is 40,000. And which method? Straight line method. Straight line method means always every year depreciation will be same. Whatever depreciation we provide in the first year, same depreciation we take in the second year also, if they are using for 1 year. And here what is happening on 31st March 2020? On 31st March 2020, what is happening? Here, furniture was sold. Furniture was sold for rupees 18,000. So furniture is sold for 18,000. They are not keeping the furniture in the business. They are selling that furniture. Okay, on this date, on 31st March 2020. They purchased in 2016 and they are selling in 2020 for 18,000 rupees. It is selling price. Prepare furniture account. So we have to prepare furniture account, and till the sale we have to prepare the account. Till we get this date, then we have to stop. After that we will stop the preparation of account. Till this date we have to prepare the account. Let us see how to prepare the account now. Since this is what method? Straight line method. Depreciation formula, asset value into rate by 100. Asset value is 40,000. Rate is 10%. Divide by 100. If we do calculation, we will get 4,000. 0, 0, 0, 0. 4,000 into 1 divided by 1, 4,000 only. So whatever amount we get here, that is known as annual depreciation. Annual depreciation is 4,000. Means 1 year depreciation is 4,000. Okay. Let us see how to prepare the account now. You already know what columns we have to draw for preparation of the account. So here we are going to draw columns as like this. Date particulars, LF amount, date particulars, LF amount, DRCR. Since this is furniture, we have to write furniture account. So furniture is purchased first. On the debit side, purchasing date we are writing. When they are purchasing? On 1st April 2016. So we are writing here 1st April 2016. Okay. Let me keep like this so that you will understand it properly. Yeah, now it is good. So 1-4-2016 to bank account we write asset value 40,000. We have recorded 40,000. And on the closing day, what is the closing day? 31st March. If they don't give any closing day, then we have to take financial year only. Financial year means they close always on 31st March. So 1st April is a opening day, 31st March is a closing day. 31st March 2017. Here 16, so here 17. By depreciation account. So here if you observe, they are using machine from opening date till the closing date. 12 months is used completely. So 1 year depreciation should be taken. 1 year depreciation is 4,000. Just now we calculated. You can see here it is 4,000. Annual depreciation is 4,000. So we can take 4,000. That is why depreciation is 4,000. Suppose it is not there. While balancing, we will check the totals. 40,000 debit side, 4,000 credit side. 40,000 is more, so we recorded both the sides 40,000, 40,000. From 40,000, we deduct 4,000, we get 36,000. This is known as balance carried down. last date will be recorded here. And 1 year account is finished. Let us take balance carried on the opposite. In the next year, as to balance brought down 36,000, and date will be next day of that. 31st March, next day is 1st April. Okay. So here in the next year, actually next year opening day is 1st April 2017. It ends on 31st March 2018. By depreciation account we write. For full 1 year depreciation is 4,000 because it is straight line method. Whatever depreciation we get in the place of annual depreciation, we take that only 4,000 and balance it. If you balance, we get 36,000 on the debit side, 4,000 on the credit side. 36,000 is more, so both the sides we record 36,000 only. From 36,000, if you deduct 4,000, we get 32,000. That is balance carried on. Date is last date in the month. 2 years account is finished. Let us go to next year. 1st April 2018, because we record here next day of this date. So to balance brought down, same 32,000 we recorded in the next date on the opening day. Here again opening date is 1st April 2018. Closing date will be 31st March 2019. Nothing happened here. They did not purchase any asset. They did not sell any asset. Just they are using that asset. That is why we have to see how many months the asset is used. From 1st April to 31st March of 2019, they used that asset for 12 months, 1 year. So what is 1 year? So you can see here, the year is starting from 1st April 2018 and ending on 31st March 2019. 1 year asset is used. That is why we take 4,000 because annual depreciation is 4,000. And again balance it. 32,000 is more, both the sides 32,000, deduct this 4,000, we get 28,000 balance carried on. Let us go to next year. Same balance carried on the opposite side we can write to balance brought down, date, next date, 28,000. And here opening date is 1st April 2019, closing date is 31st March 2020. On 31st March 2020, something happened in the question. 31st March 2020, the furniture was sold for 18,000. Furniture is sold. Okay. When it is sold 31st March 2020, whenever any asset is sold, we should write on the credit side by bank account, in bracket sales. Date of sale will be recorded. Date of sale is 31st March 2020. And what is the selling amount? 18,000. We recorded 18,000 here. So, after this we should find out profit or loss. How to find out? There are two ways. 28,000 here and here 18,000 plus 4,000, 22,000. It is less here. 28,000 both the sides you write. Minus 22,000 we get 6,000. If we get on the credit side, write by profit and loss account in brackets loss. 6,000 is loss on sale. Sometimes we get on the debit side. That is profit. Okay, you can write to profit and loss account profit. But here it is loss. This is one way. Now account is finished. I will tell you another way of calculating depreciation, loss also. You can see first this answer once. See, this is another way. Profit or loss on sale of furniture. So what you should do here? You should take first opening date asset value 40,000. Every year depreciation you should deduct. Here we have depreciation. First year 4,000, second year 4,000, third year 4,000, next year 4,000. So all depreciations we have to deduct. First year depreciation, second, third and fourth year depreciation. Okay. 40,000 minus 4,000, 36,000. Minus 4,000, 32,000. Minus 4,000, 28,000. Minus 4,000, 24,000. So 24,000 is the value of asset at the time of sale. That is sold for 18,000. So 24,000 worth of asset we are selling for 18,000. Definitely we get loss. That is 6,000. 6,000 is loss. This is another way of calculating. So whichever is easy, that you can follow. I'll show this complete question and answer once. You can see. Hope this is clear. If any doubts, you can mention in the comment section. I'll clarify your doubts. If any problem solutions you need, you can mention in the comment section. I will make another video also. Like, share and subscribe the video. Thank you.